We are back with the quarterly results, and I'm especially interested in two sectors, which is one is bank and the other is IT sector. And when we are talking about IT sector, this time, for the first time, this has happened when Infosys, Wipro and TCS, all of them has come up with the result on the same day, and that has caused a little bit of confusion. Should we track them independently or should we do a side by side comparison? But because the data is coming out very nicely, so I thought probably I should allocate more time to each company. So we will start with Wipro and then jump into Infosys, and also then we will talk about TCS. So starting with Wipro, if you are a Wipro investor, I am sure you have made enough money. So please be ready to lose some of that. The expectations were quite high, especially when they posted some strong results in last 2 quarters. And if you know, they did a Capco integration or acquisition, and because of that, they suddenly saw a revenue rise. However, it seems like despite Capco now, the revenues are coming muted, and that is reflecting in their numbers. So if we talk about their numbers this quarter, here are they: an increase of 3.3 in quarter on quarter, and year on year it is 29.6%. so 3.3, you will understand how much it is, because last quarter they were about 6 to 7% or more than that. So from there they are coming down to about 3%. It's not a great thing to see. Now the core sector, which is IT services, which is growing rapidly for Accenture, and we also will see on Infosys the similar impact, that is growing just mere 2.3% quarter on quarter. That's not a nice feeling again. And if we look at their operating margins were already squeezed in, and now their operating margins are coming down further because of probably the attrition, the higher employee cost, employee retention cost, so all kind of expenditures. So that has come down by 19 bps to around 17.6. Not a good thing. Then again, when we look at their net income, it's just 1.3 percentage growth quarter on quarter. Earning per share 4.2%, and operating cash flow, when we talk about, it's 101% of the total income, with a growth of about 41,000 employees in the quarter, which is 10,000 net addition. That means 30,000 employees or 31,000 employees left them in these last 3 months itself, which means they are a total of 231,000 employee strength company. So they have declared a dividend. So if you are a shareholder of the company, you will get that benefit. What's interesting is that even the next quarter growth is mere 1 to 4%. There is nothing extraordinary about that. Street anyway expects that. However, because of the past run up in last 6 months, Wipro has seen, or the run up Wipro has seen in last 1 year, the expectations were quite high. The important factor here for Wipro is they have taken a different stand from a normal Indian IT peers. They are going ahead with acquisition and they are being aggressive. So it's quite similar to what Accenture has done. So this quarter they have done some acquisition, last quarter they completed some acquisitions. So it appears that they have decided on inorganic growth. If they continue to grow in this fashion, probably we will see a sudden revenue rise anytime in future also, because of the inorganic growth. And that's important factor. This is the same model which Accenture has chosen, and if we go by that example, which is very successful example for Accenture, if you have not seen that video, please look at that. You would see Wipro can any day change the perception again. So in the short run, it appears that Wipro will see a decline in the share price. So, but in the longer run, probably we will see a lot of traction coming back. So if you are not a shareholder of Wipro, probably if the share corrects about 10 to 15%, it's a good deal. But if the share stays around these levels, probably in these 3 months, because there is no big news event for Wipro for next 3 months, probably I would say it will come down gradually, but at least 10 to 15% cut is likely. But we never know. Uncertainty is the key in the market and for the market, so we will see that. But to my expectation, the stock will come down for sure. If you look at employee engagement figures and the attrition bit closely, you will see some worrying sign for companies. That is good sign for employees. So whatever way you want to look at it, so employees attrition has clocked 22.7%, which is really high, and total headcount is now 231,000. Gross utilization ratio is 75.6%. That's important factor. They have also done some breakup. They have also shown some breakup on attrition. So while the attrition, voluntary attrition is 22.7%, that means it's voluntary. It might be they have also some involuntary attrition that will take it little higher. On attrition level, we have some more data from Wipro, and if you look at it, the attrition is, voluntary attrition is 22.7%, while the post training quarterly dropouts are about 10% attrition. That is quite high. And if you look at it, it's about 1 year ago or 2 years ago, it was about 4.4%. That means the people who join other companies after training, it has grown at least 2.5 times. That's a big number. The result indicates clearly that the attrition worry is not going anywhere. People will continue changing jobs. From Accenture results, it appeared like we are reaching that peak, and things will calm down and cool down a little, but seems like that was just for Accenture. Accenture might have taken various steps to control the attrition at their level, but it's not replicating in other companies, especially Wipro. It is not seen yet. So we will continue to track this space. If you are somebody who has invested in Wipro, please be careful. I'll see you in next video, which is Infosys, very soon. Thank you.